Parvez Qazi is joining us with more on that. Parvez, we are looking at the data which shows that the growth in volume terms, at least in the top 7 cities of India, is very healthy. And the subsequent rise in the stock prices as well. Out of the universe of real estate stocks which you track, talk to us about how valuations are faring. Some of the obroids and the macrotechs of the world appear 60, 70 times, 100 times, depending on whose estimate we are talking. Which are the ones which are still not very stretched on valuation in your view?
Hi, good afternoon. So the correct way to value real estate stocks is frankly on the cash flow, which is NAV or the DCF basis. Relative valuation parameters like P or EV EBITDA doesn't really work in this sector because of the accounting policies which work on project completion. Ideally, you should look at cash flows because they give you a better idea about the current financial performance of these companies. So when you look at the cash flow metrics, most of these stocks are currently trading on par with their NAV, which is you would consider fair considering that the housing cycle is in an upturn and most of these companies are reporting very strong operating numbers. Going ahead, we do not believe that there is likely to be any further re-rating trigger in the near term. That is probably 1 year down the line when you might see some comfort coming on interest rate cut. So at least over the next 6 to 12 months, stock performance will be driven by operating parameters like pre-sales growth, which we expect will be anywhere between 20 to 30% for most of these companies.
Right. And, right now, if you're looking at it in the real estate space, anything that is looking exciting to you, what would you look at over there in terms of your top picks for there?
Our top pick has been DLF for quite some time. We continue to remain bullish on the name, considering the lack of competition in the Gurgaon market and also the strong balance sheet and cash flows for the company. Apart from that, we also like some of the Bangalore-based players like Brigade Enterprises because there the sales momentum is pretty strong. So these two are our topics in the real estate space. But nevertheless, as I said, housing segment is in an upcycle. So most housing companies are going to do well, both operationally as well as from a stock price point of view.
Right. So, last 24 months, we have seen that the cycle has really turned around. And whenever this cycle actually turns around, it usually is prolonged 3 to 5 year plus. Last cycle was 10 years back, but it lasted 5 year plus. Are you convinced when you talk to some of these large companies of the demand momentum, the kind of supply which are coming on stream, that it may last another 3 to 5 years from here?
Absolutely. 2 points convince us from that. First, that house affordability remains at a very, very comfortable level. It is, in fact, now the second or the third best when you look at the last 25 odd years. So that convinces that this cycle is likely to stay here for the next 5 years. And the second is on the supply side also, because of the industry consolidation, supply continues to trail demand. In fact, that has been the case for last 4 to 5 years, and which is why unsold inventory levels remain at a very, very comfortable level. So we are fairly convinced that this upcycle is likely to stay for at least next 4 to 5 years.
Right. Parvez, just one last thing I want to ask you also is in terms of the demand and the supply. Now, while supply, obviously, we saw some healthy completions coming in some of the towns and increase over there. But demand, whether you look at office leasing also, that was a bit subdued. That saw a decline there as well. And, there's a slowdown in leasing from tech companies as well. Any sort of a concern, sort of a worry coming in on the demand side, or how are you viewing this now?
So office space, actually, the situation is kind of reversed. There, you are seeing very, very healthy supplies coming in. On the other hand, demand is weak, both from foreign companies, largely because of the recession in the developed markets, and also from domestic companies because of the SEZ issue. Here, we feel that demand is unlikely to pick up, at least in this fiscal. Any kind of uptick in absorption will probably come only in FY24. So yes, office space is likely to remain weak, at least for the rest of this fiscal as well.
Okay. Thank you so much, Parvez, for joining in with us this afternoon and giving us an insight on the real estate sector. But